Sometimes naked is beautiful. It's very simplistic. That's my older version of my headshot. Here's a disclosure. Okay, you guys, if part of the Alpha team, just I show this real quick. This is who I am, which I'm not going to go through. You know, what I want to do is I want to give you guys the S&P weekly chart analysis of 2023. So there it is. There's the naked chart. Okay, naked. Sometimes naked is beautiful. It's very simplistic. So now let's backtrack a little bit. Okay, do you guys all remember the start of the year? Okay, I call this the first part of the year. If you look down, January, March. For those of you who get my report, I came in very. So now let's backtrack a little bit. Okay, do you guys all remember the start of the year? Okay, I call this the first part of the year. If you look down, January, March. For those of you who get my report, I came in very bearish for the first time in 10, 12 years. In my 2022 report, I was like, the Fed's going to be a headwind, not a tailwind. The surplus, the free money, the this, the that. And then it's still even hard to make money having that kind of, thought process. But basically using the process, there were a few things to see. So to start the year, if you look right here where we lost the moving averages, we lost the 21-day moving average, and you could probably draw a trend line right below it around 40, probably 4,600-ish. Not 48.18 the high. You didn't need to do the high. 4,600, you could have said, hey, we just lost the moving averages. So what happened there? Going through March, we put a low around 4,100, which became a very big level. Okay, and then we came back to retest that lost, level, and did a little red dog reversal sell, and that's what started to, put in the right shoulder of what I thought. Sometimes, guys, I talk about a pattern that's might be building, and I'm pretty good. I don't know how I visualize these things. Like I forget to take the garbage out on Tuesdays and Thursdays and turn the lights off in the basement, but I could visualize patterns that happen because I've seen them 1,000 times. And right here, I was like, this could be a head and shoulders top. This could be the right shoulder. This could be the neckline. I remember explaining the whole thing. So then all of a sudden that happened, right? Now, what does that look like? You could Google a head and shoulders top pattern, and they'll give you pictures of head and shoulders top patterns from all different spaces, but it's still, some people don't know how to play it. They don't know how to navigate it. And right here, I remember from 48.18 down to the neckline of 4,100, I'm like, this is 600, handles or so. And for me, I'm like, wow, this could take us from 4,100 to 3,500. You have your left shoulder, the head, the right shoulder. Does everyone know a head and shoulders top pattern? Raise your hand. I can't see you, but everybody knows what a head and shoulders pattern looks like. We're not that smart. So you get the head, you get the left shoulder, the right shoulder, and here's your neckline. And the neckline is support. When it breaks the neckline, typically that's where a lot of supports come in. That's what accelerates a move. So if you look below, basically you had a move in May and June below the neckline. Okay, so this is your active sequence to the downside, and basically the measured move from 48 to 41 or 600 or so handles. So that's where I thought maybe I would put my wife's money to work also, and that's when I would look opportunistic. So here you had the first move lower, the retest of the neckline. So if you missed the break, you were able to short the retest, and then all of a sudden, you wind up having your measured move down to 36.36. So your first real pattern that showed its face in 2022, besides losing the moving averages and the accelerated trend, was your head and shoulders top pattern that gave you a 600-point measured move down to 36.36. Okay, I actually put two tiers to work in my wife's Blood on the Street account, one around here and one pretty much near the lows. So she had 2 of 4 in. And then obviously we traded daily, and weekly based on, our risk. And those on the Alpha team get to watch my positions. Those in Redler All Access get to see my disclosures. And every day I try and come up with a plan to navigate it. So if you look here, I try to shade this as a potential bottom area because that was the measured move. And then to me, if you think about where it could go, I was like, maybe we can go back to 4,100. And that's probably where people started to short it, if we were to have that bounce. And the first thing you have to do is get above this 3,900 or 3,906 to even get there. So the next thing that happened was the next active sequence that went from 36.36 to 43.25. We cleared 3,900. So if you didn't catch the bottom, you didn't need to. Okay, if you didn't catch 36.36, you had a lower pivot. You could draw a lower wedge. It cleared 3,900 and still gave you a 400 handle move to the upside. That was my most profitable sequence of the year. Okay, that's when I went down 6 figures, probably up a bunch. And then right here, if you remember into this, okay, right around here, I didn't have the top. I remember it was August. And just think about it, because Mike Wilson, right? Mike Wilson had a lot of good calls, but he could have blown up traders the same way he could have helped traders, because during this entire rally, he was still talking about, the S&P, 3,400 or 3,200. So that's what you guys have to be careful. You have to be careful listening to analysts, because they don't give you an in, an out. It's up to you to figure out your ins and your outs and your own risk tolerance. So there are people who said, oh, Mike Wilson says we're going to 3,400 and shorted this whole way and couldn't handle it. And then you all know where we went. But this move was awesome. That went to the August top, and then you could see another, little part of our process, which is the red dog reversal right there at 42.80. So right around here, I said, I'm in all cash in my blood on the street account. And that's when I also tried to, I net like 14%. That's when I said I was going to try and make money net short, because now you had your active bearish sequence. That's one sequence that went into the summer. Then you had your second sequence from the June lows to August. And now you have two sequences to ride within 1 year, right? Sometimes you have 10, 12, sometimes less. And then from here, we wound up having the red dog reversal, broke back below. And then, you wind up having a move all the way down towards below the moving averages, which confirmed the red dog reversal sell, and down to 34.91. So the way I navigated this with her cash account is, since I went to all cash here, I'm like, maybe we could hold here. And that was one tier. But to give confirmation to stay in the active sequence, remember this red dog reversal here? I think that was Jackson Hole, where besides this one, you had a confirmation of another one, and also you're below all the moving averages. So even if you got out of the market late, right around here, 4,000, 39.76, 3,900, you still get out before it went to 34.91, which was another 400 handles. So this is active sequence 1, active sequence 2, active sequence 3. We hit 34.91 into this active sequence. Again, a lot of things blew up. You had a tech making lower lows. You had Amazon make new lows of the year. You had Google make new lows of the year. Meta make new lows of the year. AMD. You had some serious friggin' names blow up. One of the things I pride myself is that, you guys should not have held your breath and went underwater and held those things, because we didn't hold them, and, you knew your process. Different than a DocuSign and a PayPal and an FCell, high growth names that were, just fluff. These were real companies. They blew a lot of people up. But anyway, if you got caught in one of them and you're trying to be like, oh, I got caught, hopefully it doesn't happen the next time. So anyway, this was 34.91. Here was tier 1 buy on the blood in the street account. Here was tier 2 into the double bottom. It didn't happen. So now you had the left shoulder, you had the head. And remember, right around here, I started talking about the inverted head and shoulders pattern that I thought was coming up. I really want to reinforce what to look at, because I do think next year is going to be a range-bound year with a lot of active sequences, but we're not going to make a new all-time high. We probably take out this 34.91 at some point in the first or second quarter. So I want to make sure you know what to look at when we have active bearish sequences to keep your risk down, and then we get into active bullish sequences so you're not caught short and you could participate. And if you're part of the community, I'm going to guide you through those day by day. If you're not, I want to teach you now. So anyway, 34.91 is right there. Now what I did is, you see how you had this lower shaded area and we got above 3,900? I tried to do the same thing here. I tried to shade this lower pivot, saying if we get above this, we could see that. If we get above that, maybe we could see more. And this was just to rehash of what we lost and where we went down to. And then here was the lower pocket pivot. Here was your lower pocket pivot that went to 43.25, and all of a sudden we got above 37.41, the same way we got above 3,900. We got through 3,900, and now we're holding it. And now this 4,028 is a key spot, which I'm going to get into some charts later. But all in all, again, active sequence 1, active sequence 2, active sequence 3, switch some gears, and we're in the process of figuring out how long active sequence 4 is going to go. And here we are in Thanksgiving week. Today was a pretty good day where we had a little range resolution that hopefully will carry us a little forward, which I'll get to that. Here's where we are now. And, at this point, I could probably draw a line of 4,028. And I think there is a chance, which I'll do with the S&P charts, we can get to 4,100 to 4,140. But unfortunately, I think there's too many people talking about that. But after today's action, it gives me a bit of a higher probability of that.